Hello everyone, this is Juan Sarmiento and today is Friday, September the 17th. Let me start by including two new trades that I have considered. Let's look at them. They are HCA and I already have it, so that's not going to be it, but I do have FFIV. So let's copy that and then let's discuss it. I copy the trade, put it here. Just click there and there it is. You can create it obviously in your trade tab, and this is the way it looks right now. All right, so let me just discuss what I've done to come up with it. The value of the trade, the cost is $41, $41.40 right now, and that multiplied by 200 times, it gives me 41 times 200, it gives me $8,200, which is 10% of my account. The expected earnings was, just fantastically exceeded here. You can see it was $1.64 was the estimate, and it made 276, and I included that here. The difference is a 68.5% exceeded the expectation. Then the earnings, I'm sorry, the volatility here. Let's go to the Analyze tab, and you can see here I have entered the data here. It's already changed quite a bit. Let's enter it here. Front month, back month, front month, back month. So 28.3 for the back month calls, 27.25, and that's 27.75. And the front month 25.7, 25.15, and the difference is 2.35 on the two averages, so that's tradable. Okay, this is very motivating when you see such a difference. You think that the stock should go higher, much higher, but if it doesn't mean anything to me, but it would tend to go higher and the minute the market turns bullish. So that's our protection for the upside, and for the downside, the volatility is what we're looking at. We want to see good volatility increases. Okay, so now the mid is 71.05 currently. I just look at it here in the bottom right corner of your screen. The debit 41.05. Let's put that here. 41.05, and the natural should be easy to calculate. Create duplicate order, and here it is, 43.2. Go back to the spreadsheet, enter it here, 43.2, and that is a little not liquid enough, but given that the other issues are more motivating, why not? I overlook this do not trade message here, and let's look at the current IV percentile simply by going to the monitor tab, the trade tab, sorry, all products, and then we have the FFIV here, and here is the current IV percentile under today's option statistics is 5%. Okay, 5% here, and of course that's tradable, very tradable. So let's enter that. The only one thing you should be careful about is when are the next earnings coming, and that's in October, so I'll be all right. Excuse me. Okay, let's enter this. I just have to enter 2 lots instead of just one. Create duplicate, confirm and send, and then here you see. Okay, so how do you do that? How do you increase the number of lots? Well, how about say multiple accounts, and we are not only interested in this one account, and so by increasing one, there it is, and we know the exact price. Okay, so send that off, and we wait until it gets filled sometime in the near future. In the meantime, let's look at our current trades, organize them alphabetically, and let's go through them by one. Analyze for Apple. Okay, so that's October is the expiration, October and January. I'm expecting volatility to pick up, and a little pickup in the volatility by even 1% should be enough to give us profit, 1 or 2%. Yeah, so we just have to trust. Otherwise, the stock could go bounce back up and find my cone here. That's what one would hope. Let's look at HCA. Okay, here October is the expiration, so that's still far back, so let's leave that alone. Lowe's. Okay, Lowe's is going strong today. It looks like it's going to break out to a new high. Very, very close to breaking to a new high, intraday high. No intraday, but outside, closing high is what we're looking for. It's at the edge there. If it does, it might break out harder. And this is September expiration, so we want to move this over. Analyze rolling. And we go to the expiration October 15th, for example, and that will give us what we want. A few dollars back. Confirm and send. The reason I'm doing the rollover is because we have October 22 should have been what we wanted, so let's cancel that. And yeah, we don't need to go that far. Yeah, ignore the 29. Okay, let's move on to MS and look at the risk graph. We have adjusted already by reducing the call side by 1 and the put side. We can increase it right now. Let's look at the chart. We can increase the number of short puts. We have to have a balance here. So how about if we sold one? We just have to put sell, just the one, 64 cents, and our deltas become a little more positive, just in case we have a bounce. You can do that. It's a tiny adjustment, no big deal, okay? But it increases the short puts by 3. You can go all the way to 8, but we're not going to do that. Okay? I don't usually do such a thing. I just keep it half, and that's good. But what you have to focus is on the deltas here. Try to get it delta neutral. Let's go to Nike. Okay, Nike has been going down. Let's take a look at the chart. Oh, okay, so earnings are coming up. So we either close the position or neutralize it again. And it's negative, so we can increase the number of puts. Yeah, how about we increase the number of puts by, you have 2 long puts, 6 long puts, short, long, short, 4 short puts. We have 3 long calls at 150 and 2 at, that's my FIFIV chart, trade filling. Okay, so you can also lower the 175 call. How come I have the 175? I did a roll up. Let's go to the monitor tab, account statement, and look for that roll up. Well, I have done several roll ups so that when I got to the 175, I already have a credit of 24.8. So you can buy back the 165 or the 150 calls. Okay, and what we're doing is taking back our credit. That seems like too much money to pay for this. If I did this, I think it's too bullish. So I don't think I want to do that unless we did only one. And that looks a little more neutral. I will be putting $9, $8.99 additional, which times 100 is $899. Do I want to do that? It looks like it might bounce here for some reason. It's been going down very nicely, and it's in the Ichimoku cloud right now. It might bounce out of it. Earnings we should neutralize for earnings anyway. That's the Lowe's roll trade. Okay. 65. Okay, so we could sell puts, or we can do this roll down. I mean, essentially roll back. Let me just show you this. If we did the 55 to 65, we did a roll up from 50 to 65. If we hide everything, just think of it this. We have a vertical spread, but that's not all we did. We kept on rolling as the market went up from 65 to 75. And we did 50 to 65, and then this one here. Let's do them all, okay? You can see that's a vertical, and then this one here. Okay, so this is the trade put together, okay? And so now we reverse that by buying back 2, 50 to 75, and we are taking quite a bit of credit from that trade. So this is something you can do. It's not going to, it's like taking your profits, that's all, from your vertical spreads. So you could do that. Now disregard that, and we are going to see, well, what is the resulting trade? Okay, is it neutral? No, it's quite bullish, 75. But if we did only one, then it's more delta neutral. If we leave it alone, it's delta negative. So I'm going to do this, okay, rather than add a put, just in case the market goes down further. And so I'm adding, of the $30 that I may have gotten credit, I'm putting back 9. Okay, let's do that. And then let's move on to NVIDIA. No need to change anything right now. It's almost delta neutral. And then YUM. Let's reset this. We are right here in the cone. Do we need to roll them up? No, not really. October 1st is the expiration, so there's plenty of time for that. Okay, let's take a look at the market. I think it's been going down all day long. You might wonder how come the VIX, the volatility is not going higher, because the market has been going down. You would have expected a big jump. Well, it's really sort of been going sideways rather than strongly down, and so, well, who knows? The market might go further down and hopefully volatility increase, which will favor all of our trades. That's all for today. Thank you very much for joining me, and I'll see you next time. Bye-bye.